You're listening to this podcast, so I know you've got a curious mind. Here's a helpful fact you may not know yet. Drivers who switch and save with Progressive save over $900 on average. Pop over to Progressive.com, answer some questions, and you'll get a quick quote with discounts that are easy to come by. In fact, 99% of their auto customers earn at least one discount. Visit Progressive.com and see if you can enjoy a little cash back. Progressive Casualty Insurance Company and Affiliates. National average 12-month savings of $946 by new customers surveyed who saved with Progressive between June 2024 and May 2025. Potential savings will vary.
Growing a successful business has never been easy. But whether you're navigating a complex industry or trying to reinvent one, our breadth of banking experts are here to collaborate on market-proven solutions. At KeyBank, we're built to grow with your changing needs because we're not just here for the business you are now, we're here for the business you'll become. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B.
Welcome back to another episode of Investies. I'm your host, Linda Garcia, Texas State Representative and author of the book Wealth Warrior. This week on the podcast, I explore the idea that technology has killed the pension plan, but has birthed the stock option. This week's episode is inspired by a story that was circulating in the media that there were some SpaceX employees that traded their options for restaurant gift cards. But before we get into this week's episode, let's go ahead and take a look at what happened last week in the market. Last week was a volatile week. The majority of the volatility was coming from all of the inflation data. The Dow Jones was up 0.7%. All three indexes tried really hard to recover their losses, and they did relatively well. For the S&P 500 and the NASDAQ, we also saw roughly a 0.7% increase for the week. We had hot inflation reports. The first report that came out was the CPI, Consumer Price Index. As a reminder, CPI measures the price tag at the store. So it is the price that impacts us as consumers. That came in at 4.2% for the month of May. This is the highest it's been in more than 3 years. And so this is a relatively serious number, as our target is 2% year over year of inflation. The PPI, Producer Price Index, came in even hotter than the CPI. It was at 6.5%. I'm not going to lie, this number is alarming. This is the highest that we've seen since 2022, when we were seeing really high numbers of inflation. So PPI, as a reminder, is the price tag at the factory. It is what the retailers pay for the product. And eventually, the increase in price trickles down to the consumer. So it will impact CPI numbers when that happens. The market processed the information and quickly shrugged it off, and then moved on to focus on a potential US and Iran deal. We also saw the oil prices begin to fall. I do also think that it was really hard for the market to focus on CPI and PPI numbers. It was heavily distracted with SpaceX going public on Friday, June 12th. The SpaceX ticker symbol is SPCX. It was priced at $135 a share, and it opened at $150 a share. It popped by more than 20% and closed its day at around $161 a share, up 19%. Let me explain why there were two different prices. The $135 was the IPO price, and that is the number that is set the night before. The opening price was $150. Those are set by two completely different things. The $135 IPO price is the number the company and its investment bank agrees on the night before. That is the price that shares are sold to a select group. That's sold to big institutions, allocated investors, and this takes place before trading opens. So the jump of $135 to $150 means that there was massive demand. There were tons of buyers and limited shares, as we discussed last week. The gap in price is known as a IPO pop. Here's what's really interesting and was all the discussion on Friday morning before the IPO went public. The pop is great for early holders, but it also means that they left money on the table, believe it or not. That means that they could have priced the shares higher and raised more money. I cannot believe I'm saying this, most especially given how high the evaluation already was. So really quickly to clear up any confusion, the amount of shares and at the price that it is sold at the beginning, the $135 IPO price to the early investors, the institutions, that is the amount of money that they actually get to raise. Those are two separate things from then the IPO going public and the share price increasing in value. So what was purchased hours before it went public is money that they allocate, and it's going to reflect on their cash balance sheet. The other really big conversation prior to SpaceX opening on Friday morning was the conversation surrounding the green shoe. There were also a lot of SpaceX employees that were wearing green shoes on that day, and I want to talk to you about what that means and where that comes from. The green shoe is an agreement between the lead underwriter and the publicly traded company. In this case, it's an agreement between SpaceX and Morgan Stanley. If the price of the stock increases dramatically at the time of making the stock public, then Morgan Stanley has the option to go to SpaceX and buy more shares and make those additional shares public so that there is more supply. In other words, so that more shares are available and sort of relieves the pressure of the shares going up higher. So this increases the float. Remember, we talked about the float in last week's episode. However, it doesn't increase the float by much. The float is currently 5% of shares being made available to the public. This would increase the shares by almost 6%, not quite. So the float is still very minimal. Morgan Stanley has 30 days to exercise the green shoe mechanism and purchase these shares at $135 a share. The SpaceX IPO had over $250 billion in demand worth of shares, so most analysts are expecting for Morgan Stanley to exercise the green shoe. They call it the green shoe because in 1963, a company by the name of Green Shoe Manufacturing Company created the mechanism, and the name just stuck. On the flip side, Morgan Stanley is also responsible for stabilizing the price. This is different from the green shoe. If the stock moves in the opposite direction, let's say it starts to dip below $135, its IPO price, then Morgan Stanley is responsible for purchasing those shares to bring the stock back up to $135.
Study and play come together on a Windows 11 PC. And for a limited time, college students get the best of both worlds. Get the Unreal College Deal. Everything you need to study and play with select Windows 11 PCs. Eligible students get a year of Microsoft 365 Premium and a year of Xbox Game Pass Ultimate with a custom color Xbox wireless controller. Learn more at windows.com/student offer. While supplies last. Ends June 30th. Terms at aka.ms/collegepc.
When you need to build up your team to handle the growing chaos at work, use Indeed Sponsored Jobs. It gives your job post the boost it needs to be seen and helps reach people with the right skills, certifications, and more. Spend less time searching and more time actually interviewing candidates who check all your boxes. Listeners of this show will get a $75 sponsored job credit at Indeed.com/podcast. That's Indeed.com/podcast. Terms and conditions apply. Need a hiring hero? This is a job for Indeed Sponsored Jobs.
Staying on the SpaceX topic, but also pivoting into this week's episode, it was reported that out of 22,000 employees, 4,400 current and former employees woke up as millionaires. This included blue-collar workers like welders, and apparently in some reports, it also included folks that work in the cafeteria. There was also a story circulating that completely broke my heart, and that was that some people early on traded in their stock options for restaurant gift cards. Apparently, the rumor is that they specifically traded in for a Chili's gift card. I cannot imagine what the people that traded in their stock options for gift cards are feeling in this moment. It angers me because this is exactly why we created Investies. This is exactly why I wrote Wealth Warrior. This is exactly why I teach a course. It's just, I am so, you all know, I am so passionate about this. And the reason is because if it wasn't for my colleague hounding me to purchase stock options, I wouldn't be talking to you today, and I certainly would not be where I am today. It almost terrifies me to think how I would feel had I not invested. I'm sure that I would have understood eventually what my colleague was trying to tell me, and to imagine the increase in the worth and value of the stock options back in 2012 when I started working at Netflix and how it has popped, that would have completely crushed me. I feel like this little miracle took place in my life, and I didn't grow up with the resources like so many of us in this country. This is why we record and work hard on these episodes every single week. It pissed me off and broke my heart to hear that. The people that offered gift cards in exchange for stock options should be ashamed of themselves. The curiosity of investing specifically into the stock market has changed dramatically since I started investing back in 2012. The landscape has changed. Obviously, what is also changing are the industries that are available. We are watching technology emerge in a way that for a lot of people is unimaginable. I think it's going to be really important for us to understand that AI has been here for a very long time. It is just that now we have access to AI, us, we, the public. The first computer was being developed in the 1930s, and it didn't emerge fully until during World War I in 1945. Now, public access to computers where you could have a machine in your home was in 1977 with the Apple II model. I know that some of you weren't even born in 1977. I wasn't. I was born in 1980. But I bet if we asked families during that time if they had access to a personal computer, the majority of people would say no. They barely had a television set in their home. So I want us to really think about how old this technology specifically is. I didn't have access to a computer until I was a junior in high school. And I remember my science teacher talking to us about how he was surfing the web. And I thought to myself, surfing the web? What does that even mean? And then Mr. Vermillion followed that statement with, of course, you guys don't know what surfing the web is. You will not find out until way later because you all are poor. And we, you can guess who we was, we will be ahead of you. He was an asshole. I first got access to a computer in 1999. It was just access to Word documents. The internet, or a form of the internet, it was called the ARPANET, went live in 1969. It didn't get released to the public until 1991 as the World Wide Web. I wasn't surfing the web until the year 2000 in college when I had access to a computer lab that also had access to the internet. The only reason I had access at that time was because I was going to college. I remember it not being normal for people to have access or to have an email at that time. Now, of course, a lot of bad has come from having personal computers and access to the internet, but also a lot of good has happened. And without it, there is very little that can function in today's society. Now, I want to talk to you about the timeline of AI. And I know it sounds like I've gone off topic, but I'm going to pull this all back together. The conceptual birth of AI was in 1950. It was named and formalized in 1956. So by 1956, it was artificial intelligence. And then we didn't have public access until 2022. AI is not going anywhere, and we are starting to see different markets emerge and in unexpected places. The first time that SpaceX implemented AI was in 2012. Shortly after what Elon learned with implementing AI in SpaceX, 2 years later was carried into Tesla. What a lot of people don't understand is that Tesla is not a car company. This is why the majority of the industry was unable to really price or put a valuation on where Tesla would be. When I first started researching Tesla back in 2019 and then into 2020, it was very clear to me, and I'm on record saying this, that Tesla is not a car company. It is not an electric car company. It is AI on wheels. At one point, when Netflix was distributing CDs via email, it was impossible for people to perceive that as a tech company. But it is, in fact, a tech company. It's also an entertainment company. We have seen how technology has taken over industries, from Amazon taking over retail stores and putting stores like Bed Bath & Beyond out of business. We are going to start to see AI do the same thing in different sectors. And as I mentioned earlier, this is currently taking place in different parts of our country, and it will continue to expand in this way. Technology is not what it once was, where it was locked up in Silicon Valley. It is now in a lot of people's backyard. The SpaceX facility that is in Texas is located in Starbase, Texas, and the majority of the people that work at Starbase are from Brownsville, Texas. Brownsville, Texas has a national poverty rate that is double than the national poverty rate. It was also ranked one of the poorest cities in America. In the last 2 years, SpaceX has added over $13 billion to the South Texas economy. The facility generates 21,000 indirect jobs. So aside from the 4,000 that Starbase, the facility there, employs and is currently looking to increase by another 4,000 in the next year, it also indirectly generates 21,000 jobs in the surrounding communities. Not only does Brownsville rank high in poverty, the entire RGV does. The national poverty rate is around 12%. Texas poverty rate is 13.7%, and the RGV alone, the Rio Grande Valley, is roughly 25%. 30% of SpaceX employees that work at the Starbase facility are coming in from other locations, meaning they relocated to work there. They're usually the higher paid engineers and technical specialists. Meanwhile, the remainder 70% are actually from the RGV. And then, of course, the 21,000 jobs that have been generated to support the current infrastructure growth that is taking place there are mostly people from the RGV. There is, of course, a lot of tension right now in the state of Texas, not just with SpaceX being here, but also with data centers popping up and Greg Abbott supporting that entire agenda. What bothers me is that his administration, year over year, has deteriorated our school system. And so I would like to see that if these spaces are going to exist, that we should at least be able to provide the proper education so that most of the people that are paid a lot of money actually come from the RGV. In the 1950s through the 1970s, we had the golden era of manufacturing. This was back when steel was a big industry, manufacturing cars and planes. And one of the big incentives in working for one of these companies was a pension plan. As you already know, the pension plan has been disappearing. It is very rare that you can acquire a job and have access to a pension plan. Typically, pension plans now are more accessible with government jobs. However, we have seen the issues with this. Right here in Dallas, Texas, we have seen firefighters and police officers lose their pension due to really bad investments. This isn't just isolated to Dallas. This is something that has happened in multiple places across the country. I think that as technology grows in the United States and it starts to acquire more and more employees, the incentive is the stock option, which is sort of replacing the pension unofficially. This is just my perspective as I am watching all of this unfold. And unfortunately, a lot of the people that are being employed don't necessarily know how a stock option works. It is very different from shares. And also, I want to add that if you are not working for a publicly traded company or a private company that offers equity, let's say you are an entrepreneur, the positive take on this is that you can purchase shares and you can build your own portfolio. The biggest issue is the lack of resources and education in the space. Next week on Investies podcast, we are going to go into the different types of stock options that both private companies and publicly traded companies offer to their employees. We're also going to talk about how you can exercise these options and rules surrounding the options. Thank you for listening to this week's episode of Investies. I'm your host, Linda Garcia. If you enjoyed this week's episode of Investies, I'd like to ask you for a huge favor. Head over to whatever application you are listening to this episode on and consider giving us a review and also rate us. This really helps the podcast gain amplification. Thank you so much. Investies is a Cosmic Standard production. A special thank you to the team, Crystal Patino, Asia Simpson, Eliza Smith, and Jacob Winnick. Everything you hear on Investies is for informational and educational purposes only. Nothing on this show is financial advice, and nothing should be taken as a recommendation to buy or sell an investment. Always do your own research. I am not a financial advisor.
This is a Monday.com ad. The same Monday.com helping people worldwide getting work done faster and better. The same Monday.com designed for every team and every industry. The same Monday.com with built-in AI, scaling your work from day one. The same Monday.com that your team will actually love using. The same Monday.com with an easy and intuitive setup. Go to Monday.com and try it for free. Yes, the same Monday.com.